I'd like to hand it over to Ian Cribbs. Thank you so much for being here.
Thank you, Summer. Appreciate the time and the opportunity. Just a moment about myself. My name is Ian Cribbs, as Summer had said. I'm an Arizona native. I cut my teeth in the financial world as a teller at 1AZ Credit Union, as a matter of fact, many, many years ago. I moved from 1AZ to a local bank and became a personal banker. That is when I fell in love with the business world. I moved into commercial banking shortly after that, and I have now gone full circle, and I'm back at 1AZ for a second time since 2013, where I was tasked with rebuilding and relaunching business banking as a business banker. Recently, I took over managing Northern Arizona for business banking in 2017, and recently expanded to supporting the entire state of Arizona. And incidentally, my wife and I have been successful business owners for 13 years now. What I would like to do today is discuss 3 topics: the importance of business partnerships, the business climate and how it affects the lending environment, and finally, financial vehicles that businesses can utilize in their day-to-day needs. So let's get started. This quote by Thomas Barr: "We are proud to partner with 1AZ. The values align with local first and building a strong local economy. 1AZ provides a wide variety of resources for small businesses across Arizona and make it possible to keep your dollars local." Partnerships in your prospective communities with other local businesses are invaluable. It is important to understand the referral web between other local businesses. Having a good relationship with businesses around you will inevitably lift your business. In this quote by Thomas, I'd like to pull out 3 words: strong local economy. How does that happen? Where do we fit into this web? It starts with aligning yourself with other businesses with the same core values. Think of a union. One voice can be drowned out in the white noise. Many voices are very difficult to ignore. So a little bit about 1AZ Credit Union. It is a not-for-profit organization. As you can see, we have 21 branches throughout the state of Arizona, 145,000 members, over 7,000 business members. We were established in 1951. And here's a fun fact: before we opened our first branch in downtown Monroe, Phoenix, we kept our loan files in a bathtub. Now, talk about high finance, right? Our mission statement: we exist truly to improve the lives of our members, our associates, and the communities we serve. The communities we serve are so vital to us and our business. That's why we turn and look inward and bond and create partnerships with the businesses in those communities. In this slide, there are many different iterations of those 3 categories defined here: small business banking, and commercial banking. Really, the point of this slide is to find an institution that is not too small to help with your financial needs, but is also not too big to care. Full service relationship banking is really what you should be looking for in a financial institution. Here's another example of partnerships that we at 1AZ have forged with local businesses. On the left there, you have Lady Law with Mahalo Made, food truck business with wonderful shaved ice. Mike Spangenberg with State 48. He's a branding company that makes all of our t-shirts for us. We believe it is important for us to seek out and partner with local businesses for our needs as an institution. Now, let's talk about the climate, the business climate in Arizona. Phoenix ranks number 17 in the nation for tech talent growth, and number 16 for best place to live for young professionals. Arizona became the top, and it is one of the top 5 states in population growth. Now, for larger businesses like Amazon, for example, Phoenix is the big attraction for the state with a large population and a reasonable cost of living and affordable real estate. Yes, folks, I said it, reasonable real estate. According to the US Census Bureau, Phoenix will need to build 25 to 30,000 new homes per year just to keep up with current demand. That takes into consideration the current inventory levels that we have. So we got a long up and to the right curve with real estate and population growth in this state. We're very excited about that. And now we have COVID. Here's just a little bit of a timeline on what has happened. As we all know, a little bit of a recap though. March 20th and through 31st, Arizona shut down for business. May 4th, retail may operate curbside delivery and by appointment only. Then we moved June 29th, paused operations of bars, gyms, movie theaters, and water parks. Such a bummer about the water parks. July 9th, restaurants limited out to indoor seating capacity of less than 50%. July 23rd, paused operations of bars, movie theaters. And what is going on today? In recent news, looks like we are 3/4 of the way, 90% of the way of finding an effective vaccine. Let's hope and pray that that happens. I don't look forward to another shutdown. Now, let's talk about what has changed in business lending. For instance, we will be looking at additional documentation, looking at interims. We know what COVID did to businesses around Arizona. What we want to know is how the business reacted and what measures were taken to rebound. Additional documentation, interim financials, reviewing whether the business applied for a PPP loan. Another one, PPP loans and the likelihood of the forgiveness of that PPP loan. Reviewing any deferments on personal or business loans, and reviewing the ability to weather storms like the disaster we faced with COVID. What kind of balance sheet are we doing? Jamie Dimon, the CEO of Chase Bank, coined the phrase fortress balance sheet. What that basically describes is a business where you review your weak spots, find opportunities to change them and make them stronger. Has a lot to do with liquidity and cash on hand and inventory days, etc. We as financial institutions, what are we going to be looking at for documentation and how is that going to change? A couple of additional documents financial institutions will be looking for moving forward. Obviously, 2 years business tax returns is nothing new. But year-to-date profit and loss and balance sheet. We will have questions around cash flow relating to COVID-19 and the pandemic and what we went through, which could lead to a month-to-month income statement ask. We also are going to ask for personal tax returns and financial statements, which is also nothing new. However, we will be looking for PPP documentation and deferment documentation. How will these loans, the EIDL loan, as well as the PPP, affect cash flows and or will they be forgiven? Now, let's take a step back for a minute. This is nothing new, but these are probably, in my opinion, some of the most important factors in determining credit approvals. It's the 5 C's of credit. Character being the first, in my opinion, is the top. It's a top one on my list. What kind of person are we dealing with? Move to capacity, the ability to repay the debt with cash generated from the business. This is your cash flow. Condition, economics, right? The economy and the industry that particular business is in. How is the business affected by economic adversity? That's a big question these days, right? Capital, positive equity in the balance sheet. For instance, how much cash on hand is available for the business? And finally, collateral. What are we securing the loan with? Is it something that's adequate for what the need is or what the ask is? Here are some icons on the summary of services. Now, if you look at the top two icons, really you can draw a line below those two. Those are lending vehicles, loans for vehicles, loans for real estate, equipment loans. And then everything else below that really has to do with the movement of money, checking and savings accounts, cash management, credit cards and lines of credit, and merchant services. These are all different ways of moving money around to different things. Now let's get a little bit more specific about working capital needs. We have two different revolving lines. One is a line of credit and one is a credit card. We all know what those are. Line of credit, depending on the business structure, this can be useful for working capital. A line of credit is designed for short-term use of funds. Say, for instance, you have a vendor that you order a large order from, and they require payment up front. Well, you need to get that order and sell that order before you actually have the liquidity to pay for that order. Well, you can use a line of credit on a short-term basis in order to accomplish that need. Credit cards are helpful in the day-to-day transaction of business. Credit cards can be highly useful in very short-term spends and more regular uses of capital on a smaller line of basis. So let's talk a little bit more about credit cards. There are many different types of credit cards. Check out this scenario. You have 3% cash back on travel, office supplies, telecommunications, and internet service. 3% cash back, that's a lot more than we're getting in our savings accounts these days. 2% cash back on restaurants and 1% cash back on other purchase categories. Now, it is a good idea to assess your spending needs because one credit card might be better for you than another one, depending on where you spend the majority of your transactions. Like this, for example, you do a lot of travel, this is the card for you. You do a lot on telecommunications or internet, this is the card for you. There's one thing you should note about business credit cards. They are a very short-term vehicle, and it is not a good idea to keep balances on them. Please pay them off monthly. There's other additional benefits to credit cards too, especially for business owners. You can have spending limits on other cards for your key employees. So you can have multiple cards out there to where they each have their own identifying numbers, spend limits, you know who's spending what, when, where, and why. So let's talk for a minute about a good reason for seeking a loan. Support or expand business operations, right? That's a perfect reason to ask for a line of credit. When you have short-term working capital needs, when your business is booming and you're short on collateral or capital, that's a really good reason. If you're going through an expansion and you need more space, a real estate purchase, another great reason to ask for a business loan. Equipment or vehicle, again, where you're talking about expansion or replacement of current inventory. Equipment and vehicle loans, very simple, easy transaction to get accomplished, yet such a vehicle and equipment loans for us, those manufacturers and transportation companies are vital to day-to-day operations. You've got to have those on the road, right? And consolidate higher interest debts into smaller payments. That makes sense. We have higher interest rates. We're trying to streamline your cash flow. We as note, where do you start? For 1AZ, you can start online at 1azcu.com. We were talking about local here. Here is my team. These are the local business bankers in Arizona. They are real people, folks. These are the people in your community. They live and they shop where you do. They're all over the state. Again, we cover from Paige to Yuma. So you'll see these people. You can have face-to-face interactions with them. And they're a really great team. Thank you for your time today.